Hello and welcome to Global Business, CCTV's new program with insights into Africa's ever-changing business landscape. From Nairobi to Johannesburg, from Lagos to Cairo, from small businesses to large-scale corporates, we take you directly to entrepreneurs making the headlines. I'm G2 Abraham here in the Kenyan capital of Nairobi, where it's 9 p.m. It's 2 p.m. in Washington, D.C. and 2 a.m. in Beijing. Wherever you're joining us from, welcome. Strikes weigh heavily on the South African economy. And how an Egyptian cafe has risen to the top of its pack in just 6 years. More than half of China's foreign aid between 2010 and 2012 was directed to Africa. In its second white paper on foreign aid, the Chinese government indicates that over $14 billion was given in the form of grants, interest-free loans, and concession loans. CCTV's Sen Yan with the details.
The white paper says, as the world's largest developing country, China allocated 89 billion yuan, about $14 billion US, for foreign assistance from 2010 to 2012. Largely through grants, interest-free loans, and concessional loans. And during this period, the scale continued to grow. Other forms of aid included undertaking entire projects, dispatching medical teams and volunteers, offering emergency humanitarian aid, and reducing or canceling the debts of the recipient countries. Over half of China's foreign aid went to African nations, and to promote the realization of the Millennium Development Goals, China directed most of its funds to low-income developing countries, mainly in Asia and Africa.
China's foreign aid started from the 1950s. We assisted neighboring countries within our available means. More than 80% of funds have been dispatched to Asia and African countries.
In the 3-year period, China provided assistance to a total of 121 countries, including 30 in Asia, 51 in Africa, 9 in Oceania, 19 in Latin America and the Caribbean, and 12 in Europe. Snap CCTV.
Zimbabwe's Finance Minister Patrick Chinamsa is leading a 20-member interministerial team for a second attempt at securing funding from China. Now, Zimbabwe needs the funding for the Zimbabwe Agenda for Sustainable Economic or Socioeconomic Transformation, better known as ZIM assets. A similar attempt earlier in the year failed as Zimbabwe could not provide a proper breakdown of the specific project under ZIM assets and when they were expected to break even. Farai Makatuya takes up the story.
The government here is desperate to get the economy going again. Its ambitious economic turnaround plan called ZIM Asset needs some $27 billion. And its implementation now hangs in the balance. But an even more pressing need is money to pay civil servants' wages on time, which the government has been struggling to do in recent months. This is Zimbabwe's second pitch to China. In January, Finance Minister Patrick Chinamsa tried and failed to secure funds, reports indicating Chinese financiers needed bankable plans and clear details on how the funds would be repaid. Zimbabwe owes $9.9 billion to both foreign and domestic lenders and has not serviced those debts in over a decade, which has excluded it from any additional funding. Farai Makatuya, CCTV, Harare, Zimbabwe.
Moving to South Africa, the country's manufacturing output contracted by 3.7% year on year in volume terms for the month of May, following continued strike action in the country. Now, according to Statistics South Africa, month-on-month basis, factory production was down by 3.3%, while monthly total mining production shrunk 6.5%. South Africa has been grappling with a series of industrial actions for the last 2 years, the worst having been this year's platinum industrial action that lasted almost 6 months. Now, talks are still continuing to try to stop an ongoing strike by metal workers, led by the National Union of Metal Workers of South Africa. Around 200,000 members are demanding wage increases of between 12 and 15%. Staying in the country, employment grew marginally in June, according to the latest AdCorp Employment Index. Informal employment also witnessed growth at 2.29, and now employs around 6.5 million people. However, there were 2,000 jobs lost in the mining sector, 15,000 in the manufacturing sector, and 1,000 in the construction sector.
26,000 jobs were created during June, and 18,000 of those jobs were in the government sector, which tells us that the government payroll remains a significant problem. Compensation of employees is now 88% of government value added. So the payroll is totally unsustainable. Growth of the civil service since the last 20 years has been from 1 million in 94 to 3 million today. Manufacturing, mining, construction, these sectors lost significant numbers of jobs. It's only financial services and retail that created a few jobs. So the economy remains weak, and these figures support that.
All right, let's take a look at the markets that we track here for you. Looking at South Africa, South African share prices fell for a fourth straight session on Thursday, dropping by more than 1%. We look at Helio's strategy after acquiring 3,000 mobile phone towers from Airtel. And Egyptians react to implementation of the capital gains tax.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies.
From small businesses to large-scale enterprises, hear directly from entrepreneurs behind the story. It's about putting you in the picture so you know where Africa fits in the global context.
Global Business, weekdays at this time on CCTV Africa.
The rebasing of Nigeria's GDP has been a long time in coming.
The information provides us much more scope to know what the structure of the economy is.
Welcome back. You're watching Global Business. Now, dubbed the backup generator of the internet, the wireless internet device of the Nairobi-based crowdsourcing organization Ushahidi, known as the BRIC, has raised $1.2 million in funding. Now, the company has started production of its rugged modem, which aims to bring seamless last-mile internet links to remote parts of the world. The business case for the BRIC is simple. Reliable, stable electricity links are scarce across sub-Saharan Africa, and the overwhelming majority of internet connections are wireless, mostly mobile. Now, the BRIC seamlessly switches between 3G and Wi-Fi connections, and with an onboard battery, it still keeps running even after the power's out. Now, the first shipment of 800 units head out to 45 countries on the 17th of July. All right, joining us in studio now, the CEO of BRIC and the co-founder of Ushahidi, Eric Hirschman. Eric, it's a pleasure to see you again. We met 6 months ago when we featured the BRIC, but for those who missed our story, can you tell us what the BRIC is and how it works and who the target audience is?
Absolutely, and great to be with you again. So the BRIC was designed and engineered here in Nairobi for the internet that we have in Africa, which means that we have some disconnections in power and or internet connectivity, and this allows you to stay connected longer. Full day of 8 hours of battery allows you to stay connected. So we actually designed it for small and medium-sized enterprises and individuals who travel a lot. And what we're finding is there's a great deal of demand, not just in Africa, but in Asia and South America as well, because these shared infrastructure problems find their way across different continents. And and the needs of businesses remain the same.
Okay. And it's been a long process getting the BRIC to this point. I remember you saying it was 2.5 years to get it to the point that you were when I had met you. What's one piece of advice you have to developers out there looking to create a similar business?
Well, you know, especially when you're dealing with hardware, there's a lot more difficulty. So, you know, they say, you know, software is hard, hardware is harder. And that's very true. And when you do an integrated package like this, which, you know, the BRIC is more than just a device, it's all cloud managed. That means that you have to have a software package that seamlessly integrates so that you can manage your devices from anywhere in the world. And when you start doing that, you know, when you're starting a new company, you're starting something difficult, you have to understand that there's going to be a longer road than you first think. So you can be optimistic about it, and you have to be as an entrepreneur. But at the end of the day, you have to be realistic as well and understand that the trials of hardware and the reason why hardware is a smaller group of companies working on it is because it provides a lot more difficulties, and you have to work with groups in Asia, groups in Europe, groups in America to make it happen.
And BRIC and Ushahidi are software hardware companies based here in Kenya. Can you tell us some of the pros and cons to basing the company here, and what, if anything, is needed to entice more developers to set up shop in Kenya?
Yeah, so it's, you know, Kenya is an amazing place to be. We started Ushahidi back in 2008, and out of that post-election violence that happened, and then in 2010 we started the iHub, the innovation hub here, and then 2012 we have the BRIC, right? So every 2 years there's something new and interesting. But the reason why is because Nairobi has all the right things that you need for an entrepreneurial tech space, which has enough guys with university degrees, has capital, has the big companies, has all those things that you want. What you need to look for when you're building something, though, is you need to find the talent. And the pros of it here is you can find the talent, but a lot of them you have to work up to the level you need. So we had no problem finding really great software engineers. Kenya has a lot of good software engineers. But electrical and RF engineers are a little bit harder to come by. So that was one of our big challenges. The other challenge is when you're building hardware in Africa, anywhere in Africa, not just Kenya, you have to import a lot of components. And therein lies the biggest challenge, because the regulations, the policies enacted by the Ministry of Industrialization decades ago still echo today. And those are really bad if we want to have an agriculture, if we want to have an industrial sector that's any more than just agriculture. You know, so we need to have some reforms made in order for us to actually be able to import the components to build these here. Because right now, we build these not in Kenya, but we build them in the US. So the final assembly is not done here because it would be too expensive. So as African nations, Kenya specifically, we have to think really long and hard about what are the rules and regulations and policies that we have in place that allow companies like ours to exist and actually just manufacture here too.
Okay. Thank you very much, Eric Hirschman. The BRIC retails for $199. It can be ordered online. We want to congratulate you. You just reached a 1 million point for raising your seed capital for the company. You'll be sending your first shipment out. Is that right?
That's right. A week from today, actually, the first shipments go out. So we're very happy. We have 800 pre-orders, and those go out to 45 countries around the world, and we have a couple thousand more waiting in the wings to buy. So it's been a fantastic first trip around the year, just trying to get it built. But we have a long way to go.
Well, it's been a long road, we know. We just want to congratulate you. Thank you so much for joining us today,
Appreciate
Eric Hirschman, the CEO of BRIC and the co-founder of Ushahidi. To some company news now, Helios Towers Africa has secured equity financing of some $630 million from new and existing investors. This comes just days after India's Bharti Airtel agreed to sell about 3,000 of its telecom towers in Africa to Helios. The Pan-African mobile infrastructure firm has already completed negotiations on new and extended debt facilities of over $350 million with international and local lenders. Now, Helios Towers says new investors, Providence Equity Partners, and the World Bank's IFC Africa Fund would join existing shareholders who all increased their stake in the firm. With this latest fundraising, Helios Towers will have raised over $1.8 billion over the past 5 years to fund acquisitions and organic growth. Now, joining us live from London for more on Helios Tower Africa's new acquisition is Neil Taylor, the Chief Legal Officer of Helios Towers Africa. Thank you for taking the time to speak with us today. Neil, using the same infrastructure that HTA has just recently acquired that Airtel wasn't able to turn a profit on, what does HTA hope to do differently in order to turn a profit now?
Well, thank you for having me. And I think the main difference between us and what Airtel would have done with the assets themselves really comes down to our independence and our focus purely on the towers. Mobile network operators have been attempting to share infrastructure for a long time, and they've done it with varying degrees of success. I think the main difference is that a mobile network operator is always going to have something else to focus on. They've got 100 other things to do that are as important to them as the towers. At Helios, all we do is focus on the towers and on delivering the service and the co-location. We make the entire network available to other mobile network operators. And I think that's the key difference. It's not that we do anything better, it's just a matter of focus and being independent. We are a neutral player in the market.
Now, what can the customer expect to see in terms of service delivered from Helios's acquisition of these 3,000 towers?
Well, for Airtel, what they'll see is improved service because, again, that level of focus that we bring, we are able to deliver better uptime than the mobile network operators themselves have been able to deliver. It is quite a logistical challenge to operate this many towers in Africa. And we've been doing it for 4 years now. And in every acquisition we've made of a tower portfolio, there has been an immediate boost in the amount of uptime that the mobile network operator enjoys. So for Airtel, what they can look for is an improved service level on what they have been experiencing. And when their towers are on is when their customers can make calls. For other mobile network operators, what they'll see is an ability to have those towers become available to them. When another operator wants to co-locate on a tower, we immediately focus on it and we make it happen right away. We have driven most of the co-location that has happened in Tanzania and DRC, where we've been for the last 3 or 4 years, and of course we also have an operation in Ghana.
All right, thank you for joining us. That's Neil Taylor, the Chief Legal Officer of Helios Tower Africa. Now we move to Egypt, where investors and analysts are having mixed feelings on the recently introduced 10% tax on capital gains and stock dividends. The North African nation started implementing a new levy in a bid to increase the country's sources of revenue following more than 3 years of political unrest. Now, the tax will be applied on capital gains from the local stock market, and any other profits garnered by Egyptians from investing in securities abroad will be applied to the dividends. The decision was met with mixed reaction within the business sector, with some wary of the negative effect it may have on investors.
Some people are worried that there is an attractive feature to the Egyptian stock exchange and that people will move away from the bourse because of this. But we saw that there is a stamp duty which was brought in, and it was applied on the biggest 1 over 1,000 in every transaction. As long as profit is being generated, the investor does not mind paying his tax.
If we consider that trading in the stock market is a form of commerce or trade, then all commercial activities have taxes applied on them with no exception. All investment activities have taxes. Any commercial or investment activity that generates profit should have taxes applied on them.
The application of taxes at the present time is tough on the investor because even if the investor generated profit over 6 to 7 months to compensate a part of the losses that he went through since January until now, I think this is a tough or extreme decision relative to the Egyptian investor. But we are now dealing with reality because it was applied.
All right, let's revisit our story on South African employment. In June, according to the latest AdCorp Employment Index, informal employment also witnessed growth at 2.29%, and around in employees now 6.5 million people. Thousands of jobs have been lost, 2,000 in the mining sector, 15,000 in the manufacturing sector, and 1,000 in the construction sector. Joining us live from Johannesburg now, we have a guest, Dowie Rudit, the Director and Chief Economist of the Efficiency Group, an integrated JSE-listed financial services company offering a comprehensive value in propositions in the financial services for private clients. Thank you for joining us today. Let's start with employment. Now, the figures for South Africa's youth are staggering. Now, officially, youth unemployment, youth being defined as 15 to 34, has risen to 36%, although many believe that real unemployment is closer to 50%. Estimates say that more than 3.2 million youth in South Africa are neither employed or engaged in education or job training. Now, what's the way forward on this?
Good evening, thank you for the invite. Well, I'm afraid it's not a pretty picture in South Africa as far as the youth unemployment is concerned. Certainly not only about the youth, but unemployment in South Africa is certainly a big problem. It's not only a problem in South Africa, of course. This is a worldwide phenomenon where we see huge increases in unemployment. Look, for example, at Europe. But additionally to South Africa, I think the fundamental problem to unemployment, not necessarily youth unemployment, has to do with labour legislation in South Africa and, of course, weak economic growth. So the South African economy is simply not growing fast enough to accommodate all these job seekers to the economy. On top of that, the quality of South Africa's skills development, particularly things like, for example, our education system is, well, the reality is not always up to scratch, and the reality is that we have, it's expensive and it's difficult to employ people, and the kind of people that you can employ are not always that productive. So I'm afraid this is a problem that we will grapple with in South Africa for quite a long period of time.
Now, South Africa's manufacturing output contracted by 3.7% year on year in volume terms for the month of May, following continuous strike actions in the country. Now, what effect will this have on South Africa's economy?
Well, quite a lot. The first quarter economic growth in South Africa was a minus quarter. The economy contracted by 0.6%. The question really is, will the second quarter be a minus quarter as well? I don't think so yet. I think we're probably going to report a positive economic growth in the second quarter, but there's a good possibility that we could see negative economic growth in the second quarter as well. We see the manufacturing sector, you just mentioned that, doing not too well during May, for instance, and the previous months as well. The mining sector is under pressure at the moment, so there's a good possibility of the economy contracting in the second quarter as well. If that should happen, then of course the South African economy will officially be in a recession with 2 subsequent quarters of negative economic growth. Now that in itself, of course, is a problem, but keep in mind that certain aggregates, like for example fiscal deficit and fiscal debt levels, the current account deficit and the like, are all expressed as a percentage of the economy or as a percentage of GDP. And that means that many of these aggregates are moving in the wrong direction. So I'm afraid the numbers that are coming out at the moment are certainly suggestive of an economy that is currently under a lot of pressure.
All right, thank you for joining us. That is Dowie Rudit, the Director and Chief Economist of Efficiency Group. Now we take a look at the commodity prices for the day. Brent crude edged down on Thursday, extending its longest losing streak in 4 years as weak gasoline demand in the U.S. offset a rise in crude imports in China. Still ahead, we feature the Sky Cafe, an Egyptian food chain that's making waves in the industry. Welcome back. You're watching Global Business. Now to Egypt, where a cafe and restaurant chain called Sky Cafe has managed to become a popular brand in Egypt, Libya, and several Gulf countries. Now it was established 6 years ago, but quickly made a name for itself in the growing food industry. It serves 86 million people. Yasser Hakim spoke to the owner and filed this story.
Established as a small cafe by Ahmed Gamal a few years after his graduation, it has now become a famous brand in the country.
I started the food business, cafes and restaurants. It's not my main business, but due to a recommendation from a friend of mine who has a chain of restaurants, he told me that it's a good business. It's tough, severe competition. You have to be up to the standard, up to people's or your customers' expectations.
He fell in love with this business and decided to expand. Sky offers a unique blend, a corner of drinks and shisha, another for lunch and dinner, and a Bedouin area, all in one place.
It's very enjoyable in the open air and has kept its standard throughout the years. A nice atmosphere too.
But it has not been an easy ride for many in the last 3 years. Whilst many businesses closed down due to the instability after the 2011 uprising, Ahmed's Sky Cafe has managed to sustain itself, and it even grew larger with a chain, many branches inside and outside the country. But there have been hurdles on the way to this success in Egypt and the Gulf area.
I have some problems which I faced, like people who work in this field. They are not service orientated, so you have to give them brief. You have to give them how to deal with the client, how to serve food in different atmosphere other than other places, how to make your customer come to you. Many people were afraid of going out. Also during the time of curfew, we were closing by 6 o'clock. No people are afraid of going out, demonstrations.
Ahmed Gamal sees potential in the Egyptian market as he plans to open new branches in the next year.
I ask all investors to come here in Egypt in touristic projects, food industry projects, cafes and restaurants, even all projects. It's a good field now, but you have to be in your business 24/7.
Yasser Hakim for CCTV, Cairo.
All right, let's take a look at how your money is trading. We focus on Ghana. The Bank of Ghana raised its prime interest rates by 100 basis points to 19%. Now, the bank urged for tougher government action to stabilize the country's economy. And some highlights of what we have coming up on Global Business tomorrow for you. South Africa's Ministry of Labor is optimistic that officials of the striking National Union of Mine Workers will take the latest offer from employers on Friday. We'll have the details for you tomorrow. We also tell you about a hair care brand that has grown out of the trunk of the car to be a top brand on the continent. That's it for this edition of Global Business. Remember, you can stay in touch with Global Business and send us your feedback to globalbusinessafrica@cctv.com. You can visit our Facebook page, CCTV Africa. You can also stay in touch with Global Business on Twitter using the handle @CCTV News Africa. I'm G2 Abraham. Thanks for watching.